Alright guys, so in this video we're gonna talk about the buy low sell high concept in detail. Alright guys, so what we mean by buy low sell high, guys, it's basically exactly as it sounds. Alright guys, so we already know that in the market we mark out our key levels where we have a resistance and we also have a support. Alright guys, so in an instance where price is coming down into our support level, all right guys, and we are anticipating that the market will reverse to move higher. So as we know that as the market is coming into our support, this is a low that we have in the market, right guys? So we buy low. All right, so as the market is pushing into our support, we anticipate a reversal and then we buy at the low. All right guys, and then we sell high. What we mean by that, as market is moving into our resistance, we anticipate a reversal, and then with that reversal we sell high. So we know market is at a high, so we sell it while it's at that high. All right guys, so that's basically what we mean. We buy low, we buy at our lowest point in the market, and then we sell at our highest point in the market. All right guys, we buy it while it's low and then we sell it at a high price. Okay, you buy it for you buy it for $5 and then you sell it for $10. All right guys, that's how you make profit. All right guys, okay, and then okay guys, so in a situation where we have an uptrending market, we have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Remember, the market is not always perfect. All right guys, so just to make it a bit neat and clean. All right guys, so we know that this is how we draw our trend line. This is our supporting trend line, and then to make it a channel, we would then have our ascending resistant trend line. All right guys, okay guys, so in this situation we know that as the market is moving high, as the market is moving in an uptrend, it's creating highs, right guys? So we have a high that's created, and then we have another high, and then we have lows.
What we do here is go back.
All right guys, let me just label this quickly. All right guys, so in our bullish channel, so the market is moving in an uptrend. All right guys, so basically how you would use the buy low sell high concept, guys, even in an uptrending market, is that you would hedge this bullish channel. All right guys, so when the market is at a high, you basically sell. All right guys, remember, we sell it high. Okay, so you basically would sell this move all the way down, and then once the market gets to our low, what do? You buy. So you buy the market from this low all the way to this high, and then once it gets to this high, you sell from this high to this low. All right guys, then your stop loss is always below or above your trend lines. All right guys, and then once the market gets to this low, what do? You buy this low. All right guys, so as the market is moving up and down and up and down and up and down, as it's creating highs and lows, highs and lows, highs and lows, so what this concept basically means is that you keep buying it at a low, buy it low, and then you sell it high. All right guys, So that's basically what this concept means, but we don't recommend this kind of trading. This is what we call hedge fund trading, when you are going basically both directions of the market. Whenever the market is going up, you're going up with the market. When it's coming down, you're going down with the market. When it's going up, you're going up with the market. Basically, this results in over trading, guys, and then it will basically ruin whatever risk management you have, because by the time you are done doing this, you would have taken whatever amount of trades that this channel presented. All right, guys, so this is very risky. So how we would trade this as trend traders, guys, is that we would only be looking for buys. All right, guys, so whenever the market gets to a certain high, we won't be looking to sell. All right, guys, so we'll basically be waiting for price to create a high, come back and give us a low. Once we get that low and we notice that our market is pushing up again, so we notice that the momentum is moving towards the upside again, we then want to step in with that momentum shift towards the upside and catch this whole move. All right, guys, and then once we get to our high, or once price gives us another high, what happens is we take our profit and then we just wait for price to pull back. Once we get our pullback, we can enter again at a low. All right, guys, or simply what you can do is, instead of entering the market every time the market gets to a low, you can just buy at this low and hold your trade up until it gets to the very top. All right, guys, so once you get to this high, this is where you can now come and take your profit, or actually set your take profit there. Okay, so the market will move up, keep pulling back, but remember, it won't hit your stop loss. You will still be in profits. All right, guys, so the market will push up, pull back, push up, pull back, push up, pull back, push up, until your profit is hit. All right, guys, so in most cases, these are the type of trades that we try to look for as day traders. We don't necessarily like going in and out. We do scalp sometimes, depending on how the market is moving, guys. Like in the past couple of months, the market hasn't been moving that much. We've been stuck in a range for about two months now. Right, guys, so when you're stuck in a range, sometimes you just have to improvise, and we have been taking a lot of scalp trades. Right, guys, but yeah, basically this is what we're talking about when we're talking about the buy low, sell high concept. All right, guys, but we do not recommend that you do this, guys. We are trend traders. We trend with the market. If the market is in an uptrend, we're looking for buys. If the market is in a downtrend, we're looking for sells. If the market is moving sideways, we are drinking coffee or watching a movie, or I don't know, playing soccer, I don't know, whatever else we do for fun. Whenever the market is ranging, guys, that's what we do. Okay, we don't necessarily trade ranging markets, unless if, as I said, we've been ranging for the past 2 months. So in this situation, we have to trade. This is how we pay our bills. Yeah, but then in most cases, guys, we always looking for trending markets. Remember, if the market is not trending on your higher time frame, guys, you can go to your lower time frames. Like, let me just give you a quick example on a live chart. Right, guys, so if you can look at this just to spot, so we are on Euro USD on our daily chart. Okay, guys, so as you can see, this is daily, so this is one full day, another day, and then this is today. All right, guys, so as you can see, there's no market structure. It's just going down. We can't really tell what's what. The only thing that we have is a support, but then we can't also place this as a support because this candle is still running. All right, guys, so in this situation, we basically don't have any information to go by. All right, guys, but then you will notice that when we scale down, for an example, to 4 hours, what happens is we start getting, remember that the candles that we marked start from this gold part, right, guys? So as we scale down, we can see that the market starts to open up a bit. And then with this opening up a bit, guys, now we can see some sort of structure where the market was moving sideways, and then it broke impulsively to the downside and then pulled back a bit. this is an exhaustion, not really a retest. Exhausted for some time before continuing with the impulse. All right, guys. So if we had to mark out our levels, we would say, you know, we have a level here, or we might even label this one as our resistance. All right, guys. And then we can officially say that this is our support. Okay, guys, where the market pushed down, but as soon as it hit this price point 1.184, it failed to push any lower. All right, guys, as we can see with this weak rejection, this candle 1 2, so we have 3 weak rejections to the downside. All right, guys, so with this, so when you scale down, as you can see, we do have some sort of structure. All right, guys. And then if we label this also as resistance, where price pushed and then was failing to push any higher, so it pushed to push any higher, and then it came down to create this low. All right, guys. So if we move down to our lower time frame, let's say 1 hour again, look at that. Okay, so remember, this is where we started. So this is where our 4 days started from. All right, guys. So as you keep going down to your lower time frames, you can see that the market keeps opening up, and it actually keeps showing you key levels, even minor levels that you can trade from. All right, guys. So in this situation, as you can see, this was a resistance that was set, and now price is going into that resistance. What we would do is just wait for this hourly candle or the next hourly candle to close, and then just see if we are rejecting this or if we are breaking above. If we are rejecting, we just wait for momentum shift to the downside, and then we sell. All right, guys. And then if we break this and go up, we will just wait for a retest, and then we will buy. All right, guys. So what would happen is price is moving towards a high right now. Okay, guys, so this is a high point because of this. Let me just label it out. Okay, so this was our last high point in the market. All right, guys, so now market is moving towards that high again. So as market is going into this high, the concept simply states that whenever market goes into a high, you sell. Okay, guys, but as I said, we don't recommend this, because what happens is the market can get to this level and stall for a couple of days. The market can get here and break above and then continue going up. So what we do is we would wait for our candlesticks to close, wait to see if there's any rejection, wait for momentum shift to the downside, and then once we get that, that's when we will go for our sells. All right, guys, so that's the only time we will sell this high, once we get enough confluence to sell. Okay, and then in a situation where we would buy those guys, this is where our market would break, create a new high, right, and then come back for a retest, move up. So as it's coming down for a retest, guys, we simply wait for our momentum shift to the upside. All right, guys, so this high is higher, this high is higher than this high. So as this high is created, we just wait for price to come and create a low. So once we have this low, we buy the low, anticipating that the market will create a new high. All right, guys. Okay, guys, so I know this might seem a bit confusing now. It might seem like a lot of information to take in, but what happens is, guys, you will notice this is how we trade. We do this over and over and over again. So with the analysis that I'm going to be sending you guys, you'll notice that this is basically how we trade. This is what we look for, and it'll also become familiar with you. All right, guys, the most important concept here is to basically understand your market structure. Know that when you are looking at this, you are looking at a downtrend. The market is going down. The simplest way you can do that, guys, even if you put a line through it, you can see that, okay, your arrow is pointing down, so this means we are in a downtrend. All right, so in a downtrend, what we do is we want to sell. Okay, guys, so right? And remember, what do we sell? We sell highs. All right, guys. So we wait for our market to get to a high, which is exactly what's happening here. All right, guys, market is moving into a high. So once we get to this high and we notice the patterns that we normally trade, and then we would sell this. All right, guys. But as I'm recording this video, I'm actually done trading for the day, so it honestly doesn't matter what will happen here. I'm only going to be concerned tomorrow when I wake up. All right, guys. I'm a day trader. I don't really concern myself with what's going to happen. I simply open the charts, and then what we see is what we analyze, guys, and then we go based on that. We do check the news. We are aware of when the news are dropping, but basically this is the concept that we go with. All right, guys. Okay, guys, so I hope you enjoyed this video.